What's going on, everyone? I want to give you guys a quick trade recap on the setup that I used to short Tesla off the bell. Pretty much this was a one and done kind of day for me. I took, multiple contracts on Tesla. It's one of the favorite stocks that I like to trade between Tesla and Nvidia. I'm constantly watching those along with the triple Qs and the ES minis, which is the S&P 500 futures. So what I'm looking at here, and this trade started off yesterday, right? So what I mean by that is my homework was done yesterday. What I was looking at, Tesla has been extremely weak, obviously, along with the rest of the overall market. However, Tesla, above all, has been more so weak than a lot of the other names in the NASDAQ 100. We're currently trading below the 20 SMA, the 10, and the 5. You can see yesterday we did close below the 100 EMA. Now, what I was looking at here, this is going to be my pivot level. My pivot level here was also back to March the 2nd. If we look at March the 2nd and we look at yesterday's kind of low wick here, it was 186. So 186, below 186 has room down to 182, 181. Why do I say we had room to 181, 182? Because that is our next area of demand. Guys, I am not smarter than the next person. I'm not a genius. I'm not nothing. What I'm really good at is following technical analysis. What I'm really good at is trusting my process and trusting the analysis and the homework that I do. I tend not to have such a strong bias, long or short. However, I might come in with a bias, like on Tesla, I came in with a short bias. However, if something catastrophically changed in the day that gave me some sort of setup to the long side, I would not be opposed to taking a long setup. So this is what we have to trust. We have to trust our process and we have to trust our levels. If Tesla lost 186, we already know, just based on technical analysis, that there was room down to 182. Okay, that is what it is. So I'm going to get into the 1 hour time frame because I'm going to kind of show you how this trade worked out. Okay, so if we look at the 1 hour time frame, we can see that in the pre-market we are already below 186. So look at yesterday's lows, look at the 186 from the pre-market. We've already snapped that level. So a lot of people think, okay, if we were looking at 186 and we're below that in pre-market, what do? The trade's obviously gone. I can't take the trade. I don't want to chase it, this, that, and the other. So this is perfect. It played out perfectly because if our pivot was 186, and this is the area we were looking to get short, and we knew that we had room to around 181, 182, we know that there's potential in that trade. So options players, this is a trade that you needed to have been licking your chops at. I'm an options player and I trade futures, trade a little bit of equities, more so as of late, but predominantly options, futures, and then sprinkle of equities, right? So as an options trader, I need these big trades that have potential because I can't sit there and try to scalp options for 50 cents, 30 cents like I can equities. I need, dollars. I need $1, $2, $3, $4 in the trade to kind of make it worth it, right? So as we are below the 186 level here, what I'm looking at on this hour candle here is I need some sort of bounce. I need some sort of bounce. I do not need this candle to just open up red and start screaming down, because if that happens, I'm going to lose the trade. And what that means is, being that we're already below the pivot, and if the market opens up and this starts bleeding red, I can't take the trade because it's going to go to measured potential before I have a chance to get in. So what I need is some sort of bounce off the open. And if we can see here, we did get this bounce in the open over the 5 SMA, over the 10 SMA, and quickly was rejected. As soon as this happens, you start licking your chops. It's time to start eating, because as long as we don't break over and start to close over this 20 SMA and price action is not completely reversing, this is exactly what we wanted to see happen. We wanted to see it pop off the open, see it try to test these supply levels, and then start to fall. And as it starts to fall, we already have our second entry confirmed in the pre-market. If our pivot was 186, the pre-market already gave us a new low below the pivot level of 186. That became 184.20. 184.20 still allowed $2 in my trade, being that my measured potential was 182, 181. So I still have $2.50 in the overall trade that I could try to capitalize on. And I know this because I've already done my homework. So as we see the pop here, we see the rejection, we see it start to fade. This becomes our second entry. All a second entry is when you have a pivot, you want to see price action break the pivot. You want to see it chop around, consolidate, do whatever it needs to do. And then you want to see it lose that second new low, right? That's called a second entry. So our second entry gets confirmed. Immediately I go in 10 contracts short, and I sell where? At my first measured potential into the 182. Because why? I already know based on the daily time frame chart, I have the 50 EMA sitting at around 180, 199, 182. I immediately take half size off and hold a runner for a potential of the next demand zone. So being that on our chart, again, I just made a video for all of the gold members in Discord kind of explaining how we find trades and how we find good setups. If you're not a part of the Discord community, go to evolutiontraders.com, become a lifetime member. You're going to get access to that training webinar on how we find it, right? But for all of you guys who are on Discord, you guys already know, what we're looking for here, right? We don't want to see all of this congestion. We don't want to see 50, 60 cents in a trade. We want to see airspace, because when we see airspace, a lot of room, like from here to here, there's a lot of room. From here to here, there's a lot of room. And obviously over this, there's a lot of room. Below here, there's room here. And then once we get through this, all we have is this declining Bollinger Band, and we've got nothing but airspace. This is what we want to see. But being that the 182 was our first measured potential, if we look down towards our second measured potential, it was sitting right here at around 177.77, which could still get tagged tomorrow. So this play is still intact. Again, things can change if the market wants to reverse and we suddenly happen to be closing over 185, 186 tomorrow on Tesla. But we have to wait for tomorrow's price action to see that. So as we get down here and we start to lose this 182, get into this 181, I immediately just sell another portion of my contracts, and I just hold 3 remaining contracts. Because if this wants to go to 177, I want to make sure that I have a runner to capture those extra 0.2 points left in the trade, right? I'll just use break even as my stop. I'm already profitable on the trade, so I can kind of sit through all of this choppiness action here. You can see in the after hours are kind of coming down again. Tomorrow's pivot level is going to be below 180. Again, if we get below 180, we're going to see that 177 kind of price target, and any close below 177 has got a lot more room, but we'll discuss that on another video. So that's exactly how you play it. Okay, you have our pivot here, right? We already knew the level of 186. We got the break in pre-market. All we're waiting to see happen here, and if I pull up the 5-minute time frame so you guys can kind of see how this played out. If we kind of look at the first 5-minute candle after the bell opened, after the bell rang, you can see this 5-minute candle has a huge wick up to all through all this supply. Every single one of these lines is supply. What does that mean? Every single one of these lines is going to act as a form of resistance. Until Tesla was to get over about 188, there really was no room on the trade to go long. So I don't care how high this goes, as long as it's below all of this supply, I have no interest in it, because I already knew our max potential. Our big trade was here. So as we popped, I let this pop on the first 5-minute candle. And if I pull up, I'll pull up a 2-minute chart in just a minute. But I let it pop, I let it pop, let it pop, let it pop. And as we started to roll back down, and then now took out our second entry here below that 184 and change, this is exactly where I got short. Not only did we flush, we flushed, we bounced, stayed below the 5 and 10 SMA. We flushed, and where do I want to take profits? Here, guys. This is technical analysis to a T. This played out perfectly. I don't care. It doesn't take a rocket scientist or someone who's been trading for 25 years to tell you this. If we lose this area and there's nothing below, what's our first level of demand? Even if you know nothing about trading stocks, if I tell you, if we clear out all of this and we stay below all of this, which is fairly simple, right? I'm going to use the dumbest terms that I can use. This is our low point. We already have an entry if price action closes this, and as long as we're below all of these levels of rejection, all these levels of supply, look at how much space is down from a price of 184 down to 180. I want you to cover your position at the next area of demand. Next area of demand was here, sitting at around 180 and some change. I covered my position here. It bounced, it came back down, tested, and then kind of really did nothing for the rest of the day. That's how you play it. That was my recap on my Tesla trade setup. I hope this kind of makes sense. If you guys want to learn more in depth on how you guys can use different time frames to actually find big moving trades, and how to protect your capital, and how to stay in this game and understand the mindset and understand how to trade with other traders who are doing this on a day-to-day basis to help you become more profitable. Join evolutiontraders.com. I'll see you guys on the inside.